Bitcoin dropped Friday, suggesting that the benchmark cryptocurrency may decline further into the week, followed by an equally depressive weekend session in the wake of the rising US dollar and a recent spike in the US Treasury yields. The spot BTC USD exchange rate plunged 2.43% into the daily session. On the other hand, the pair was trading in a positive area on a week-to-date basis, up more than 4.5% ahead of the weekend session. The price action was choppy nonetheless, giving no clues about its direction in the coming sessions ahead. Technically, Bitcoin appeared trapped inside a range defined by two of its crucial moving averages. In doing so, the cryptocurrency tested the 50-period moving average as resistance and the 200-period moving average as support. A bounce from the 200 MA on Friday pushed BTC USD towards 50 MA for a bullish breakout attempt. Nevertheless, higher selling pressure near the latter wave kept prices from flourishing upward. That showed traders' resilience, which may have to do with unfavorable macroeconomic climate. Traders limited their bids near the local BTC USD tops as Bitcoin formed a positive correction with the U.S. stock market against the prospect of rising U.S. Treasury yields. Both the markets tumbled last week as a bond market sell-off raised questions about whether low interest rates, which propelled both Bitcoin and U.S. equities last year, can continue for any longer. Yields, which rise as bond fall, have rallied as a response to expectations of faster U.S. economic growth, led by a speedier vaccination program and inflation expectations. The yield on the U.S. 10-year Treasury was flat on Friday but surged in the previous session to 1.547%. That marked the highest close for the benchmark borrowing cost since February last year. Its climb on Thursday came as Federal Reserve Jerome Powell provided no signs that the central bank would intervene to limit the ongoing sell-off in the U.S. government debt market. The U.S. dollar benefited from the global market uncertainty, with its value against a basket of foreign currencies, known as the U.S. dollar index, rising by 0.75% on Thursday. The index surged 0.31% on Friday. More tailwinds for the U.S. dollar growth came from early estimations that the U.S. labor market would log recovery in February. As we reopen the economy, inch by inch, that will unleash consumer spending and drive job growth, especially industries that have been most severely affected by the pandemic, said Nela Richardson, a Ph.D. economist at human resources software firm Automatic Data Processing Inc.